Guys, what's up?
What's going on?
Hey,
Hello.
Yeah, so 37 minutes into our scheduled recording time, we now have 5 screens, 5 little squares on my screen. We have 5 names. I think I know how to say them. We've stolen a coworker's phone to make this work. Mike now has a degree in IT.
Yeah.
And we are now finally going to launch the Machine Shop MBA series. I'm super pumped about it.
Yes. So we're into episode 2. The last time we talked about.
Yeah, the first one was more of an intro, I guess. Yeah.
Yeah, the intro, kind of the mindset of an entrepreneur. This is great though. Like, so you're ready to start your dream shop, but like, how do you do it legally?
Yeah.
Right? There's some important stuff that.
Why does it matter to do it legally?
Just for the long term, Paul.
Well, you need a legal name, and as we're entering this series, I think it's time to double down on Mike, the Professor of Pain.
Well, maybe not. Maybe not.
I really think it would be good for the branding.
I think I can't be a professor.
Yeah,
you're be a doctor.
We have 3 partners, Mike, and you're 2-1 outvoted. So,
well,
it's official. Go ahead and change your LinkedIn while the intro music plays. All right, we're going to lay some foundation here and actually get into some really good educational stuff for this new series that we've all been kind of visioneering together. I'm super pumped about it.
Mm-hmm. Yep. I joked about what does it matter to be legal, but probably what matters really is not only being legal, but being optimized for the type of business you're going to have. And I know I've been a part of businesses where we had to switch corporate entity types.
Oh, yeah.
It's like, oh, this isn't the right one anymore. And it's expensive and it's a hassle. And so, yeah, glad to have these guys here.
Talking, you're just thinking through this episode and thinking through, 25, 30 years of career now, like how many wannabe or new entrepreneurs I've talked to over the years that like this first step of just like, you've got the idea, you've got, you got everything ready to go, but how do you start the company? Right? Like it's actually pretty simple, and hopefully people will get that by the time we get done with this. But I mean, who does that? Right? Like there's also not just thousands and thousands of people in your network that have done it before that can help you through it.
Mm-hmm. And usually you breeze past like what we're going to talk about today, and you talk about like actually competing and what your business is going to be like, what your value prop's going to be, what you're going to sell, pricing, things like that, instead of like, hey, well, how do you just like have a company in the first place?
Right.
So
yeah, I think this is a great, first step to go through, and we've got a couple of great guys here to help us figure it out.
Yeah, so I'll introduce them. I practiced their names. I think I'm going to get it right here. But we have 2 guys from CliftonLarsonAllen, great sponsor of ours, and they're going to be a big part of the series. It's Nick Vargosko. Did I emphasize it the way you wanted, man?
Hey, it's good enough for me. But yeah, you're great.
and Brad Botcher. Brad Botcher. Welcome, guys. All right. Awesome.
Perfect. Right on.
Yeah. So
go ahead. Yeah.
A little bit about myself. I'm a manufacturing principal here at CLA, with an emphasis in the tax department. I'm located out of Appleton, Wisconsin. For those of most people don't know, okay, where is that in relation to Wisconsin? I'm 30 minutes south of Green Bay, or an hour and a half north of Milwaukee. I primarily work with privately held businesses, specifically in the tool and die, pattern, machine shop, fabricating shops, the owners, the management team, assist with the compliance side, consulting, and whatever day-to-day needs that pop up as they arise.
Excellent.
Nice.
Perfect. I'll jump in with mine then too quick. Brad Botcher, I'm a principal here in southern Minnesota. I'm not going to bother to explain where at in southern Minnesota because it just doesn't matter, let's be honest. But I've been in the firm for 20 years, specialized, similar to Nick's story, specialized in manufacturing. I mean, I've helped new entrepreneurs set their business for 20 years. So it's probably been, honestly, hundreds that I've done over the years. Super excited to be here. I mean, this really is one of the passions of mine, of helping entrepreneurs get started and kind of help take that idea and then bring it into fruition and turn it into a lovely platform and
That's awesome.
business to bring to
I
the
think
community.
this is the first time I've been in a meeting with a principal and not been in trouble. So this is this is a great start.
We're not done yet. We're not done.
Just wait, Nick.
There won't be any scolding on my part, so don't worry about me. Brad, on the other hand,
He runs a tight ship.
Yeah.
So yeah, Mike, like, you've probably been a part of the most startups out of the three of us, or in new business launches, whatever you want to call it. And I know this is an important topic, so I'm gonna stop making stupid jokes and let you kind of lead us through something that's going to teach people something.
Yeah, so when I look at this, I know how I go about it, and I'm really anxious to hear what Nick and Brad think. But to me, it's I think before you can even really get into how you should form your company, I think you needed to think about what your company is going to be, short term and long term, right? So if it's just going to be you only for your entire life, maybe you got a consulting practice, you're just going to do your own thing. That's totally different than if you're going to grow something that is maybe going to go through future rounds of investment fundraising where you're bringing in external investors that are passive. And so all of that can be totally different. But, Nick, Brad, I mean, maybe you guys kind of lead us down that path of, before we get into the types of organizations you can form, what are the things that people should be thinking about to make that decision?
Yeah, honestly, Mike, I'll jump in right away here, but I think you hit the nail on the head of usually the first thing that I come into when people have conversations is I start with, what is your exit plan? Because usually everybody's put lots of thought into starting this business. How am I going to do? What are my goals? There's not a lot of thought put into, well, how am I going to get out? What's the long-term kind of business cycle? And that's a big piece for me when I'm trying to help formulate what's the best entity structure. Is, are we going to bring people in? Is my goal to build this, sell it off? Is it transition into a family? I mean, what is that? Because how we get out really is a huge key and usually unknown or not thought about a lot factor into what do we want this to look like. So that's usually probably the biggest addition that I would say. Most people think about the normal stuff of like, I want to get my idea and how do I get that started?
What if they don't?
But how do we get out?
Know? Like,
yeah.
They don't know. They think they can do it on their own, but they might need to bring in investment at some point in the future, but they just don't realize it at the beginning.
Yeah, that's a great point. So on that one, it's usually kind of, I try to talk through some of the options, and we'll get into a little bit more on the details of the different structures. But if that's the case and we don't have a strong idea, the idea is, okay, how do we structure this in a way to give us as much flexibility down the road, knowing that might not be the best structure for today and this point in time, but with some proper planning, we can still change our entity structure as we go and as things develop and evolve. But we want to create as much flexibility on that front end then to help us navigate those waters as the life cycle goes on.
So if you select the wrong structure, and then you have to end up like changing your entity type, 3, 4, 5 years down the road, how big of a deal is that? Is that a massive undertaking? Like, I think about, Paul, if you select the wrong ERP system to run your manufacturing company and you have to change it, it's massive. It's a huge, huge project. So is it similar to that, or is it maybe less complicated?
I'd say it depends. Depends on what entity maybe we start out with, and depending on what you're trying to switch to, could that cause some sort of taxable event, or is it as simple as, hey, I was an LLC and I like to make an S election? Perhaps if, depending on your facts and circumstances, it could be painless. So a lot of the things in our world are not necessarily black and white, and the fact pattern will help lead you to whatever potential answer. But there could be times where it's a little bit painful to the financial pocketbook. Hopefully that's not the case, but if we started off correctly, hopefully we can avoid some of those pitfalls.
Well, we talk a lot. I know I'm by the numbers, and then Mike Fritz talks a lot about it, of operating your business like you're always prepared to sell it.
Mm-hmm.
Right. So, I mean, kind of always optimizing that business function towards you're preparing it for sale. So, I mean, that kind of leads into really just right here from the beginning, right? Think about that exit, like you said, Brad. The, just what does that potentially look like? And at the beginning, you may have no idea, and it could be so far off in your future. 25 years from now, you're thinking about maybe what am I going to do with it? And all those things can lead to that. So kind of transitioning from there, let's talk about like, what are those basic entity types that people are going to be considering as they go into this?
If we start off with maybe one of the easiest structures, let's talk about a sole proprietorship. So those are relatively easy, simple to set up, low cost. Think of myself as the owner. I am the business. So there's no legal distinction between the two. I am the business. I have complete control. I have no other additional owners that are in business with me. My taxes are simplified from the standpoint of I don't have any additional business tax return reporting requirements. So my income will all be reported on my personal return.
It's just what the Schedule C of your 1040 at that point, right?
Yep. Now, some downfalls with that could be, from a taxation standpoint, you're going to be subject to both income tax and self-employment taxes. You're going to be personally liable for your business debts.
So like they could take your house, they could take your car if your business goes under?
Correct. I will say one small item that may not seem like that big of a deal, but those who are sole proprietors, sometimes in the market, there's this perceived lack of professionalism, right, wrong, or indifferent. But that's a small little note to think about. So usually folks who are thinking about that sole proprietorship route, it's really from a small scale operation standpoint, or I want to test the waters. Maybe I'm still working for someone else and I'm, for lack of better terms, doing this in my garage. We'll get into some more of the topics, but I think we have some more appropriate solutions or alternatives outside of the sole proprietorship route.
I think that's a perfect turn, Nick, because out of the however many entrepreneurs we've had on, I would say about at least half of them started with a machine in their garage.
Yep.
Sure.
So, yeah.
Yeah. So if we maybe keep going to the next step, I would say LLC or limited liability company. So what I love about LLCs, and Brad can throw his 2 cents in too, but the LLCs act somewhat similar to the sole proprietorship, but there's great flexibility in how I want to be taxed. And the LLC gives me some protection from my business debts, whereas I don't have that protection being a sole proprietor. The tax flexibility that I just referred to is, I think the flexibility then leads to some confusion on some folks' part, because when they see the name LLC, they say, well, I just want to be taxed as an LLC. Well, there's a single member LLC, so it's just me. That will act very similar to the sole proprietorship. I can make an election to be an S-corp as a single member LLC, and we'll get into what an S-corp is. I can be an LLC with another partner or two, and now it's multiple members. Well, that's going to be taxed like a partnership, and that's got its own set of rules as well. So it's awesome from a flexibility standpoint and the protection of your business debts and assets and the protection that you receive from that.
Yeah, Brad, if you can expand on that a little bit. So like I prefer LLCs. Most of the things I'm involved in are LLCs. I've got some single member LLCs, I've got some partnership, kind of that whole set of options there. But that can often be confusing. I know even as many times as I've set up an LLC, when I go to make all those elections, I sit there and go, wait a second, hold on. There's these 3 or 4 options I've got to consider. Can you just break into the LLCs just a little bit on what each of those kind of looks like? And I know we've got to get through some of the other stuff, the other forms too, to really understand it. But
yeah, so I mean the LLC, I mean, to Nick's point, and kind of you alluded to, Mike. I mean, really, there's kind of 3 main structures. You can be the sole proprietorship. You can do the S-corporation route, which is you can elect to be taxed as a corporation. But avoid some of those self-employment taxes that Nick had kind of alluded to. If you have another partner, you can be a partnership, and that we'll talk about that a little bit more. And then the last option is you can elect to be treated as a C corporation. So as we started this off with, we want as much flexibility as possible. While I'm not an attorney, In most cases, I mean, I'd always start with an LLC because that gives us, as we talked about this starting off, we want as much flexibility as possible. So we can really elect whatever option we want from an income tax standpoint. So we want to build in that flexibility. That's where I would start with. Obviously talk with an attorney to make sure that there's not some ramifications that we want to consider from a legal standpoint. But it gives us complete flexibility to really decide which of the
So there
four
was a
options
sole
we want to go
proprietorship,
with.
and then there was a sole LLC. That I think one of you described.
The single member LLC. Yep.
Single member. Okay. What would ever be the case to have a sole proprietorship over a single member LLC? Is there a case? It's just never a good idea.
You might as well
You
take the
wouldn't.
next step and get the
No.
LLC.
Yeah,
Okay, got it.
yeah. Really, from a tax perspective, the single member LLC and the sole proprietorship are taxed exactly the same way. The sole proprietorship does not offer the legal protection, and a sole member LLC does. So it's literally, if you're going to start a business, get that LLC set up so you have the legal protection, because that's the biggest part.
Is
You
it
want to make sure that you've got
a
that.
little
You're not on
bit
the hook
more
personally.
difficult to have an LLC than a sole proprietorship? Why does anybody do it? Why does anybody do a sole proprietorship?
Yeah. So usually the biggest piece is its cost. If you're getting that business started up, you're saying, do I want to spend the $1,500 or a few $1,000s or whatever it is to have an attorney set up that LLC and get those documents for you? Or you just want to jump in, test the waters, and see how it goes? Well, a lot of times what'll happen is you jump in, you test the waters. Well, then you get busy and things are going well, and you start going down that cycle, and you get a little bit too far. And now a lot of effort to then kind of pause the brakes, get that LLC set up when the business is kind of going. So I'd strongly recommend, basically day one, get that LLC set up so you've got that legal protection. Because once that business is rolling, you don't want to have to spend your time going backwards to correct those sins a little bit.
I would view most of the audience here probably is at the point where they will be setting up an LLC. The folks who aren't listening and aren't getting any advice from anyone, those are the individuals who are most likely setting up as a sole proprietorship.
Yeah. Nick, to answer, like how I would answer your question just practically across like all the businesses I've been involved in. Like if you're a sole proprietor, in a lot of ways, to me, it's a hobby business, right? It's just maybe it's a side gig,
Great
right?
point.
It's just something you're doing. It might be an Etsy business. It might be, so like when my wife started doing private practice speech pathology work, therapy, we didn't immediately start an LLC, but as she grew more and more clients, we did, right? So it kind of started as a side gig. It wasn't a big deal. Then we threw it into an LLC. I think anybody listening to this is thinking about starting a machine shop should at the very least, and guys, correct me if I'm wrong, but have a sole member LLC. Period. Like that's the bare minimum as far as I'm concerned.
I'm guessing there's a bunch of listeners
Day
that
one.
have their business of some type or another. So maybe we can chat about just what they should, since they're not, if it isn't the right type and they didn't do that pre-planning and thinking well enough in advance, what questions should they ask right now to possibly see about changing the type?
Yeah. So fortunate in that piece, if they have set up as a sole proprietorship and haven't gotten that LLC set up, that piece really is not difficult to get that switched over. We'll talk about it a little bit more, but usually the biggest piece is to get the LLC. You probably have to change your bank account, and you may have some federal ID numbers, some of that type of piece items to get set up. But from a tax standpoint, from really a logistics standpoint, there's not a lot of work that really goes into it. It's talk to the attorney, get the LLC set up, and you just basically change the name on some of your letterhead and some things like that. It's not something that's very difficult to undo if you've gone down that path.
So you've referenced S-corps and C-corps, and that's probably where the water gets a little bit muddier for people when you get into the corporate, either style of corporation. Let's talk briefly about S-corp, C-corp. That's one I still today, after being involved in Lord knows how many businesses, I still have to stop and think, wait, S-corp means this, C-corp means that. So let's touch on that.
Yeah. So let's say we decide to, we have two routes with the S-corp really. So in our previous conversations with the LLCs, we can make an election from day one to be taxed as an S-corp, or we can just start off right away as a corporation and elect S also from day one. So there's several big differences, I would say. in reference to S corps. We still have the personal protection. Our assets are protected from business debts and lawsuits. But one of our first big differences here is going to be that our tax is not taxed at the S corp level. This is now a pass-through entity. So let's say Brad and I start up an S corp. He's 60%, I'm 40%, and we have taxable income of $100,000. That 60 grand for Brad and the 40,000 for myself won't get taxed at the business level, get passed through to our individual tax returns, and we'll pay income taxes on our fair share of the 60-40 split.
At your personal tax rate.
At my personal, yes, correct, my personal tax rate. We've made comments so far today on self-employment taxes. Here's another great benefit of an S-corp. That $100,000, the 60-40 split, will not be subject to self-employment taxes. So what is self-employment tax? Think of payroll taxes. So we all have on our W-2s our Social Security and Medicare withheld from our paychecks. Some folks may not even realize it's being held, but you have taxes being withheld. Self-employment taxes is both the employee portion and the employer portion. So if we take both halves, that's 15.3%. The sole proprietorship, the single member LLC, we'll talk about partnerships in a little bit, but all of those options are going to be subject to the self-employment taxes. The S-corp income, the $100,000 for Brad and I, we will not be subject to the self-employment taxes. Now, knowing that Brad and I are active in our business, we're shareholder employees. So one of the requirements in those S-corps is you need to be paying yourself some sort of reasonable compensation. So the government will still get their payroll taxes on our wages, but there's going to be a slight difference on we can pull additional money out of the company. Some folks might say, "Ooh, being an S-corp, I get to take tax-free distributions." And in many cases, that's true. So again, this is one of the powers of the S-corp is when we earn $100,000, Brad and I, we can pull out money to the extent that we've had earnings tax-free, or maybe another way to think of it is a return of your basis, a return of your investment. We just made $100,000. We want to pull out $50,000. And we'll split that at our same percentages, 60-40. So 30 grand to Brad, 20,000 to me as a return of our investment. There are a few points to point out for brand new folks that are very strict when it comes to setting up an S-corp. You're limited to 100 shareholders. So you're setting this thing up day one. It's just Brad and I. We really shouldn't have any issues. We don't have any intentions of having additional owners. We'll be set. If you're planning on having an excess amount of 100 owners someday, some of these other options might be best for you. The other kicker too is you have to have a single class of stock. So if you have multiple classes of stock, that could disqualify your S-corporation. Some folks might say, well, can I have voting and non-voting? Yes, you can. Voting and non-voting will not disqualify your S-corp status.
Okay, when I think of different classes of stock, and I'm just going off of our own family business where we do have different classes of stock, that's what I think of as the differentiator, like how much weight the shares carry as far as voting. But you could have one class of stock and have different shares that some are voting and some aren't.
Yeah, the IRS allows for differences in voting rights that won't violate that one class requirement, but I would highly recommend working with the attorney that drafts your legal documents. That it's good business practice to have that explicitly stated in your articles of a corporation. Again, if you're a corporation or maybe your operating agreement for an LLC that's electing S-corp.
So I have a question about the shareholders, because in my shop, we decided to do profit sharing, but our employees could either earn cash or shares in the business. We wanted them to see some potential on the upside later. But we ended up having dozens and dozens of shareholders. So I guess if we had been an S-corp, we may not have been able to, that may have stopped us in our tracks like partway along once we got to 100. And then we would have had to switch to a C-corp or something like that.
That's a good application, yeah.
Once you get to that threshold, you're going to probably turn into a larger topic of reorganization or what can we do next that may be out of the scope of the conversation today, but that could turn into a larger topic of what are my next steps.
So you're like just trying to be Paul's 99th employee.
Well, I think you're a C corp all along, but just asking the question.
Yeah, no, that's really interesting. So let's get into the C then.
Yeah, speaking of C.
Yeah, so C corporations, again, your assets are going to be protected from your debts. You're going to have unlimited shareholders. So you won't have that 100 cap. It's possible that large businesses could be attracted to this type of entity due to the fact that you're not going to be capped on the 100. You're going to be allowed to stay in existence, and even if one of your shareholders or many of your shareholders decide to leave. Employee benefits, those are actually going to be deductions. What do I mean by that? So there's a difference between the S corp route and the C corp route. For, let's use health insurance. As a shareholder employee of an S corp, that needs to be included in compensation. So my W-2 as a shareholder employee of an S corp. In a C corp, my health insurance can just be a deduction to the C corp. When it comes to taxes for the C corporation, accounting folks 101 will have learned about this, the double taxation. So a C corp, those taxes are going to be taxed at the corporate level at 21% under current tax law. If I want to get that cash out of the C corp and to some of my shareholders, that's going to be a second level tax as a dividend up to a max of 23.8%. So capital gains plus net investment income. So with the S corp, you pay that tax at your individual return based on whatever tax rate Brad's at, whatever tax rate I'm at. There's a flat rate of 21% plus if you want to pull cash out of these C corps. Generally speaking, most individuals and other types of entities can form a C corp. There are some limitations on the S corp route. For example, a corp can't be an owner of the S corp. But in general, the double taxation at times, facts and circumstances obviously depend on the answer here, but at times are a hang up for folks on wanting to have a C corp.
Because you're getting taxed twice. So that would be like, I'll stay away from the C corp.
And if you choose not to pull the funds out of the company, you won't see that second level of tax. There's ways to bonus out money. You're going to have corresponding payroll taxes, obviously, but yes, there is. If you want to just take a dividend out of the company, that's going to be a second layer of tax.
Yeah, one of the big benefits of the times that we see the C corps, especially, is when we're looking at that exit. Like when we start and trying to figure out how we're going to get out. When that exit is likely to be an outside party, somebody who's not going to be, family or your employees, as an example. A lot of times private equity, larger investors, because they don't want that limitation of the 100 employee issue or the 100 shareholder issue for the S corporations. So a lot of the larger businesses will see taxed as C corporations. So that tends to be a little bit more attractive if that's an exit strategy.
So basically any company that goes public that could have thousands and thousands of shareholders it can only be a C corp then.
Correct. Now, the other alternative that we'll see sometimes with some of the larger ones, and they'll kind of dovetail into it, really is the partnerships are the other option. So with partnerships, and Paul, you had asked earlier, if you don't know what your exit's going to be, what route do you go? Usually my recommendation, and from my opinion, is usually the partnership route, as long as you've got at least more than one owner, because that has the most flexibility that we can easily shift into a different structure later on. It's relatively easy from that standpoint. Partnerships, we don't have the limitations on the number of shareholders. The other piece with partnerships is honestly, if you can dream up a concept, whatever crazy idea from a sharing of profits, however you want to do it, we can pretty much do that with partnerships. I mean, you come up with the craziest idea. If you want somebody to get a specific return and somebody else gets the rest of it, or whatever you want to do, we don't have much for limitations on the partnership standpoint. One of the main drawbacks tends to be, as Nick had talked about, with S corporations, you avoid that self-employment tax, which is that FICA Social Security piece. The default for partnerships is whatever income you get from that would be subject, just like a sole proprietorship, to income tax and the self-employment tax. However, and it's not to get into too much in the details, there are ways that we can get around that. So there are some structures we can put in place to kind of be a blocker to mitigate that, so we can get a similar tax answer to the S corporation. But that tends to be a drawback of why some people don't go down that route from the beginning.
Yeah, I can see how it gets complicated fast. What you need expert help on this.
Right.
Following up on what you just said there and Paul's early question. So, before we kind of get into how to form this company, let's talk briefly about what if I've set up wrong. Obviously it depends on kind of where you're at and where you want to go, right? Like, if you're a sole proprietor, you want to go to single member LLC, not a huge deal, right? Just, we're going to go through the steps. We're going to do it.
Correct.
But in nearly every case, it's doable, right? What if you set up as a C corp and you're like, okay, I'm not ever going to go public. I want to be a partnership LLC.
Yeah, really on those, that becomes honestly a case by case basis, because the sole proprietor to an LLC, a single member LLC, really easy to do. Really, a sole proprietor anything is pretty easy to do. If you're a corporation, you're a partnership or an S corp, and you want to switch between those, it really is a case by case basis. If that's something you're considering, I would really reach out to your accountants, your CPAs, and ask and sit down and have a discussion about that, of what does that look like? Because that's a piece where if you're going to make that, there can be an investment really comes from a tax standpoint, mostly, of moving from one to the other. There can be some unintended tax consequences. But in the right situations and with the right planning, we can make that work. We just want to be able to plan for that and kind of lay that out and really think through, what does that look like. So that's a time you really want to bring some professionals in.
Yeah. So obviously a lot of this is complicated, and sometimes it's easier to change your entity type. Other times it might not be. I'm sure you guys have stories of people who, like, if only they did it right from the beginning, they would have avoided whatever, right? So do you have any like that to share for us?
Honestly, for me, the biggest horror stories, and unfortunately I've seen it more times than I'd like, is it'll be a new client to us, and they'll come to us and say, hey, we were an S corporation, or we were a C corporation, and we went and we just switched it. I just went online, I did it myself, and it's done. Well, it's a piece of like, there's nothing we can do now because it's already done, and oh, by the way, you owe a really big pile of money. And unfortunately, there's no way around it. And unfortunately, that happens more than we like. So that's the piece of, before doing anything, talk to somebody else and get that piece to avoid those unexpected. Really, it's the tax bills. Let's be honest.
Maybe a smaller, fixable, somewhat could be a horror story. We onboarded a new client not too long ago, LLC. Went with an attorney, did their operating agreement, made the proper S election, had consent from all the owners. Well, when looking at that operating agreement, again, when I go back to the S corp conversation, you really need to be careful to have certain language or lack thereof language in that legal paperwork that doesn't somehow disqualify you as an S corp. So luckily we were able to catch it soon enough, but if you don't catch the wording in your agreements and the IRS audits you, they can request a copy of those legal docs. And if they see not the right language, or if they see partnership terminology in what you think is operating correctly S corp, that's going to be painful. Your S election.
Is it like fines, or they could fine you? Or
essentially, in the example I'm giving, that LLC that made the proper S election, they received the acceptance letter back from the IRS saying, "Hey, we accept you as an S corp." The default is you go back to a C corp, and now you have to unwind past years, potentially amending personal returns, and it becomes such a pain. Fun. Yeah, it's just so much easier. To Brad's point, talk to your attorney, talk to your accountant ahead of time. make sure everyone's on board with each other and understanding what you're trying to do.
Yeah, honestly, this is the first, meat and potatoes episode of the series, but maybe selecting the right accounting help and legal help is almost a prerequisite to this too. If you don't even know someone to talk to, these guys I'm sure are available. Mike, you've got plenty of recommendations on how to find somebody that you can trust to help you through all this on the legal side or the tax accounting side.
Oh, it's critically important. I mean, this is the that's what we titled this show, right? Like laying the foundation. I mean, this is the foundation of where you're at, where you're going. In future episodes, we're going to talk about picking machines, right? And we're going to be thinking about that short-term and long-term need. And this is as critical as any of it to your short-term and long-term needs.
Think of those professionals as your team, your accountant,
sure,
your attorney, your banker. Should really all be in lockstep with you, and they should have your best interests at heart for you. To allow them to collaborate with each other, I would highly recommend that. I don't think it's a good idea to let them all operate by themselves. I think making introduction.
That was going to be my question. Should they all be like in a thread essentially as you're developing this so that they can all apply their expertise? You already answered that.
Yeah, I would recommend that.
Yeah.
So when you think, you both have extensive experience in this space, where would you point people to as the most reasonable and common expectation of this formation before we get into how to do it?
Yeah, for me, usually unless there's something that directs me one way or in a different route, if I've only got one or two partners, usually I'm looking at the S-corp route, to be honest. If I've got one partner, if I've got two, and I'm usually deciding between either the partnership, if there's some unknowns, particularly of how we're going to exit. If we know that it's unlikely that we're going to try to sell this, to outside investors, I'd probably go down the S-corporation route. But if there's a possibility that we're going to ultimately bring in other partners or sell this to other investors, usually partnership is usually the route that I go first, unless there's a reason not to.
Yeah, and if like we said before, if it's unknown and you just are not sure, start off with that LLC, and you've got options. You have options for the future. You don't need to make the decision on day one.
And
Correct.
If you make it,
build in as much flexibility as you can.
Make a change. There might be some disadvantages to that in the future or something like that, but you're not stuck. So if someone's listened to everything we've said so far and they're like, man, I chose wrong, they can work through that.
Think about what Brad and I do. It's accounting and taxes. It's not necessarily life or death. So if you make a mistake, it can be corrected. There may be a cost associated to it, but it's not something to lose sleep over.
Sure.
All right. So I actually have a lot of this kind of put together. It feels like puzzle pieces in a box. I'm starting to understand the different types, the different corporate formations and why you would want one over the other. But as far as a kind of step-by-step process of, how to do what, how to incorporate, kind of like order of operations here, I think that'd be great for part 2.
Yeah. I mean, there's plenty more steps to getting the foundation laid here for sure. But the stuff we've covered can be critically important as well.
Yeah. I want to make sure we dig into, because I've seen it many times, is where the owners like buy a building and then lease it. It's a separate company that owns the building, and then the shop is different, and there's benefits to doing that. So I definitely want to make sure we talk about that.
That's actually what we do. So we'll touch on that in the next episode. So if you can't even start a business, you can't make chips. And if you're not making chips,
you're not making money.
Bam.